Hello everyone. Welcome to Markets and Economics, where we break down the Indian stock market in the simplest way possible. Today, we're going to explore all major Indian indices, from Nifty 50 and Sensex to sectoral indices, thematic indices, and futures. By the end of this video, you'll have a complete understanding of how the Indian market works and how you can track it like a pro. Want to know how to track the Indian stock market's heartbeat? Confused about Nifty, Sensex, Bank Nifty, and all those numbers flashing across your screen? You shouldn't be. The Indian index system is one of the most sophisticated in the world, serving as the critical benchmark for billions of dollars of global capital. But why do Indian indices matter globally? Because they are deeply interconnected with the world. FIIs, foreign institutional investors, move billions based on global risks and major global events, especially decisions made by bodies like the US Federal Reserve, drive capital flows in and out of India, causing sharp shifts in indices like the Nifty and Sensex. Today, we are decoding the entire architecture of the Indian market. Every index starts on one of two exchanges: BSE, Bombay Stock Exchange, Asia's oldest stock exchange, established in 1875, NSE, National Stock Exchange, the market leader in trading volume and derivatives, commanding over 90% of India's trading volumes and about 75% of the derivatives segment. The index methodology: how stocks are chosen. Stocks are not chosen just by their overall company size. Indices like the Nifty 50 and Sensex are built using quantitative rules to ensure the companies are liquid and investable. This structure is called free float market capitalization. The liquidity screen, the gatekeepers. To be included in the Nifty 50, a stock must pass rigorous filters, ensuring it is easy for large funds like ETFs to buy and sell without moving the price too much. Impact cost. The stock must have an average impact cost of 0.50% or less for a basket size of 100 million. This is the technical definition of deep liquidity. Trading frequency. The company must have traded for at least 90% of the observations over the preceding 6 months. Minimum listing period. Companies generally require a minimum listing history of 6 months. F&O eligibility. It is a mandatory prerequisite that the company is allowed to trade in the F&O futures and options segment itself. 3. Major Indian indices. The heartbeat. A. Nifty 50 sector weightage. The structural bias. The movement of the Nifty 50 is overwhelmingly dominated by the financial services sector. If major banks move, the entire index moves. Financial services. 36.84%. Including banking and insurance, oil and gas, 10.39%, information technology, IT, 10.23%, automotive, 6.81%, consumer goods, 6.49%. B. Benchmark indices, the giants, index, Nifty 50 NSE, name and coverage, 50 large cap companies, covers 54% of NSE's free float market cap, futures and options, highly liquid F&O available, new lot size, 65, top weighted stocks. Examples: HDFC Bank, 12.88%, Reliance Industries, 8.88%, ICICI Bank, 8.30%. Index Sensex, BSE, name and coverage, 30 blue chip companies on the BSE, the oldest benchmark, futures and options, F&O available, new lot size, 20, top weighted stocks. Examples: HDFC Bank, 9.14%, Hearty Airtel, 7.58%, TCS, 6.92%. C. The volatility index, India VIX. The India VIX is critical for traders. It is the official measure of expected volatility in the market, calculated based on the price movements of Nifty 50 options. What it measures. The VIX tells you how much the market thinks the Nifty 50 might move up or down in the next 30 days. Interpretation. A higher VIX signals market stress, uncertainty, and the expectation of wild price swings. Fear. A lower VIX suggests calm, stable market conditions. It is an essential risk management tool for Bank Nifty and Nifty F&O traders. The Global Gateway, Gift Nifty, and the 21-hour trading window. If you are a serious trader, you know the market is global. The biggest secret to predicting where the Nifty 50 will open is tracking the Gift Nifty. What is Gift Nifty? It is a set of derivative contracts linked to the Nifty Indices and traded on the NSE International Exchange, NSE IX, in Gujarat's Gift City. This derivative contract successfully replaced the old SGX Nifty, bringing the entire offshore Nifty derivatives ecosystem. Nearly $7.5 billion worth of daily trades under India's regulatory umbrella. Why it matters to you? The Gift Nifty trades for extended hours, providing a massive 21-hour trading window that overlaps with virtually every major global market. Session 1, 6:30 a.m. to 3:40 p.m. IST. Session 2, 4:35 p.m. to 2:45 a.m. IST. The next day. This extended session means the Gift Nifty reacts immediately to late-night news, US market closures, or Asian market activity, well before the Indian cash market opens at 9:15 a.m. The takeaway: a sharp move in the Gift Nifty at 8:30 a.m. IST often acts as a reliable early indicator of the opening direction and sentiment for the Nifty index on the main NSE. We should also note that the BSE operates its international arm, India International Exchange, India INX, also based in Gift City, providing a platform for various products for international investors. 5. Comprehensive Index Landscape Sectoral Thematic. Nifty Sectoral Indices, the full list. These indices allow precise measurement of industry performance. Note that the majority of these sectoral indices do not have FO contracts available. Or finance. Nifty Bank, Nifty Financial Services, Nifty Financial Services EX Bank, Nifty Private Bank, Nifty PSU Bank. Commodity and Industry. Nifty IT, Nifty Auto, Nifty FMCG, Nifty Pharma, Nifty Oil Gas, Nifty Metal, Nifty Chemicals, Nifty Consumer Durables, Nifty Commodities. Services Infrastructure. Nifty Services Sector, Nifty Healthcare, Nifty Realty, Nifty Energy, Nifty Infrastructure, Nifty Transportation Logistics. Nifty Capital Markets. New and Thematic. Nifty EV and New Age Auto. Nifty India Defense Index. Nifty India Manufacturing. Nifty MNC is also tracked, reflecting the performance of top multinational companies. B. Nifty Thematic and Strategy Indices, Smart Beta. These are quantitatively built indices to capture specific investment factors or themes. Market Strategy, Smart Beta. Nifty Alpha 50 measures high alpha stocks. Nifty High Beta 50 measures high sensitivity to market moves. Nifty Low Volatility 50 measures defensive, low swing stocks. Nifty 200 Momentum 30, Key Thematic Focus. Nifty CPSE for PSU disinvestment. Nifty Housing, Nifty Growth Sectors 15. C. S&P BSE Sectoral Indices, the counterparts. The BSE maintains a complete set of sectoral indices, mirroring most of the NSE segments, managed under the S&P methodology. Key S&P BSE indices. S&P BSE BankX, S&P BSE Capital Goods, S&P BSE Consumer Discretionary, S&P BSE FMCG, S&P BSE Healthcare, S&P BSE IT, S&P BSE Oil and Gas, S&P BSE Power, S&P BSE Realty, and S&P BSE Tech. 6. Trading Indices, Futures and Options. F&O contracts are derivative agreements based on the index's value. This is where active traders operate, A. F&O contract specifications. Index, Nifty, exchange, NSE, lot size, 65, expiry, last Tuesday of the month, and Tuesday every week for options. Index, Bank Nifty, exchange, NS, lot size, 30, expiry, last Tuesday of the month. Index, FinNifty, exchange, NSE, new lot size, 65, expiry, last Tuesday of the month, and Tuesday every week for options. Index, Midcap Nifty, exchange, NSE, new lot size, 120, expiry, last Tuesday of the month. Index, Sensex, exchange, BSE, lot size, 20, expiry, last Thursday of the month, and Thursday every week for options. Index, BankX, exchange, BSE, lot size, 30, expiry last Thursday of the month. Lot size adjustment. The new lot size is standardized. The minimum contract value to be between rupees 15 lakh and 20 lakh, managing risk and reducing excessive retail leverage. B. Market-wide position limits or MWPL and restrictions. MWPL. The market-wide position limit is the maximum permissible level of open positions a trader can hold in F&O contracts. It is a critical risk control measure calculated based on the stock's market capitalization and turnover to prevent excessive speculation. F&O prohibited indices. While many indices exist, derivatives are restricted to only the most liquid benchmarks, as we said before. Indices generally not available for F&O trading include Nifty Midcap 150, Nifty Smallcap 250, the microcap indices, and the majority of specialized sectoral indices. Example, Nifty Realty, Nifty Pharma. 7. Dynamics of index movement and macro linkages. The global driver. The US Federal Reserve's policy trajectory is the single biggest external determinant of capital flows into India. The FII and DII battle. FIIs, or foreign institutional investors, drive sharp volatility and follow global cues. DIIs, or domestic institutional investors, mutual funds, insurers, provide domestic stability, often acting as a buffer against large FIIs selling crude oil and currency. High crude oil prices strain the economy. A weakening rupee, INR, against the US dollar reduces foreign investor returns, often leading to accelerated FII capital withdrawal. 8. Actionable takeaways and conclusion. Overall market. Nifty 50, Sensex, broader market. Nifty Next 50, Midcap 150, Smallcap 250. Sector watch. Nifty Bank, IT, Auto, Pharma. For active trading, Nifty and Bank Nifty futures and options. Highest liquidity for risk assessment. India VIX, investing action. Index ETFs. Since you cannot buy an index directly, the most straightforward investment path is through passively managed exchange-traded funds. ETFs, or index funds, which track the index composition exactly. Nifty 50 ETFs. Major providers include Nippon India ETF, Nifty 50 BSE, SBI ETF, Nifty 50, HDFC, Nifty 50 ETF, and ICICI Prudential Nifty ETF. Sector or size ETFs. Bank Nifty ETFs, CPS, EETF, Midcap ETFs, and Smallcap ETFs are widely available for diversification and achieving specific market exposure. The Indian market index system is your map to the economy. By mastering its structure, from the rigorous F&O eligibility of the Nifty 50 to the sector concentration in Bank Nifty, you gain a powerful edge over generalized market commentary. This video is for educational purposes only. I am not a SEBI registered advisor. Investing and trading in the stock market involves risk. Please consult with a financial advisor before making any decisions.
Which index do you find most interesting for trading or investing? Nifty, Bank Nifty, or Sensex? Comment below and tell us your favorite index. like, and subscribe to Markets and Economics. Hit the bell for our weekly market wrap-up videos.